This is the introduction for financial sector and monetary policy in Malaysian economy. The financial sector plays an important role in supporting Malaysia's economy by providing banking service, investment opportunities, and financial support for business and individuals. It helps move money within the economy and support economic activity such as consumption, saving, and investment. Monetary policy in Malaysia is managed by Bank Negara Malaysia (BNM) to ensure economic stability. BNM use monetary policy to control inflation, manage interest rates, and support sustainable economic growth.
For definition financial sector, the financial sector refers to institutions such as banks, insurance companies, and capital markets that provide financial service including saving, loans, investment, and payments. According to Bank Negara Malaysia, a strong financial sector is essential to support economic growth and financial stability. The second one is monetary policy. Monetary policy are action taken by a country's central bank to control money supply and interest rates in order to manage inflation and support economic growth. In Malaysia, Bank Negara Malaysia use tools such as the overnight policy rate or OPR to regulate liquidity in the economy.
Several factors contribute to challenge in Malaysian financial sector and monetary policy environment. Global inflation has increased the price of goods and services, raising business costs and reducing consumers' purchasing power. Currency fluctuation, particularly the depreciation of the ringgit, have further increased import costs, contributing to inflationary pressure. At the same time, high household debt levels limit consumer spending and increase financial risk within the economy. External factors such as global economic slowdown, supply chain disruption, and geopolitical tensions has weakened trade and investment. Combined with the rising cost of living and slower wage growth, these factors influence Bank Negara Malaysia monetary policy decisions as it seeks to balance price stability and economic growth.
The financial sector and monetary policy have both positive and negative effect on Malaysia's economy. The positive effect is stable inflation and improved investor confidence. This helps create a stable economic environment where investors feel safer to invest in the country. Another positive effect is lower interest rates, which encourage spending and business growth. People are more willing to spend and business can expand by borrowing at a lower cost. However, the negative effect is higher loan repayment when the overnight policy rate or OPR increases. This puts financial pressure on households and companies with existing loans. Next, strict or high monetary policy leads to slower economic activities. Higher interest rates reduce borrowing and spending, affecting overall economic growth. Lastly, another negative effect is the increased price of imported goods. A weaker currency makes imported products more expensive and increase the cost of living.
This is the challenge for graduates based on the financial sector and monetary policy in Malaysia economy. First, difficulty in accessing loan. Many fresh graduates face difficulty in getting loan because they have low income and limited work experience. And also, banks may view the graduate as high-risk borrowers, making loan approval more challenging. Second is high cost of living compared to salary level. The cost of living in Malaysia, especially in urban area, is high compared to the starting salary of fresh graduate. Expenses such as rent, transportation, food, and also utilities reduce graduates' ability to save money. Third is competitive job market in financial field. The financial sector is highly competitive with many graduates competing for limited job opportunities, and also employers often prefer candidates with experience, making it difficult to fresh graduates to secure jobs. Need for financial literacy. Many graduates lack proper financial knowledge such as budgeting, saving, investing, and managing debt. Low financial literacy can lead to poor financial decisions and long-term financial problems. Lastly, the PTPTN repayment and economic uncertainty. Graduates are required to repay PTPTN education loans soon after starting work, which adds financial pressure. And also economic uncertainty such as inflation or slow economic growth can affect job security and income stability.
Okay, for my part, government and industry initiatives play an important role in strengthening Malaysia's financial system. First, the BNM Financial Sector Blueprint 2022 to 2026 provides a long-term strategy to ensure the financial sector remains resilient, inclusive, and support digital growth. Next, financial assistance and moratorium programs were introduced to help individuals and business manage financial difficulties by allowing loan repayment, deferment, and restructuring. The government also introduced affordable housing schemes for youth to help young and first-time homebuyers own homes through lower price and easier financing. In addition, My Digital and digital banking initiative aim to improve access to financial service by promoting digital technology and innovation in the banking sector. Lastly, SME financing support provides loans, grants, and credit facility to help small and medium enterprise grow, expand, and remain competitive. Overall, these initiatives help create a stable, inclusive, and modern financial system. Thank you.
To address this challenge, several solutions and recommendations can be implemented. First, strengthening financial literacy among youth is essential to help them manage income, savings, debt, and investment more effectively. Second, financial institutions should offer more flexible and affordable financial options, especially for young individuals and small business, to improve access to credit. Third, policies aimed at stabilizing the ringgit are important to reduce inflationary pressure and improve investor confidence. In addition, encouraging digital finance innovations such as digital banking and e-wallets can increase financial inclusion and efficiency. Finally, expanding job matching programs and internship opportunities will help graduates gain relevant skills and improve employability, supporting long-term economic growth.
In conclusion, the financial sector and monetary policy are essential for maintaining Malaysia's economic stability. They help control inflation, influence interest rate, and support sustainable economic growth. By understanding this concept, students can better prepare themselves for future economic challenge and job market demand. That's all from us. Thank you.